Hi everyone, Nick from WealthStart here. Sorry we couldn't be on site to deliver this message today, but hopefully it's not too long until we can be back out there with you. This is our first session in a while, and as always we've picked a topic that we feel is useful to you all at this point in time, and that's house finance. Most of my conversations with our doctors in training somehow end up going down that path. So I feel it's important we continue to provide you with an understanding of the concepts that we consider when advising you on these matters. I'll shortly introduce Dean Menzies, our Finance Manager, who'll take you through the key aspects of finance for medical professionals and what you can achieve in respect of purchasing property, whether that be to live in or as an investment. Housing is an interesting concept, particularly around the time of recessions. There are factors during these times that impact supply and demand, such as government stimulus measures and unemployment rates. Nobody knows for sure what will happen in our economy in the future, and if somebody tells you they do, I'd be very cautious about acting on the advice. If we look to history, back after the GFC, interest rates were slashed and building approvals dried up, so there became more demand for existing houses. The circumstances are different this time. For example, interest rates are already at historical lows, so we don't have a direct comparison. What we do know is that the principles we stand by when buying houses remain true. Buy a place that will be in demand whatever the circumstances. This means you should be considering things like buying in an area that's close to transport, shops, schools, and where the government might be investing in or looking to invest in new infrastructure. And remember, we always prefer a house on land over an apartment. So here's our Finance Manager, Dean Menzies, to give you some insights about finance and property.
As a doctor in training, the journey to home ownership can be hard to conceive. You've studied for many years and you are now working extremely hard. Your reward to date is perhaps a build-up of bad debt, such as credit cards and personal loans and HECS. You may also be paying rent, which will only assist your landlord in their wealth accumulation strategy. On the plus side, you are now earning an income which is guaranteed to increase incrementally over your first 8 years or so of training. So if you can manage to save, your journey to property ownership can start sooner than you think. Did you know that as a doctor in training, you can borrow up to 95% of the value of a residential property with no lender's mortgage insurance? Lender's mortgage insurance is a premium that a borrower pays if the required funding is typically above 80% of the property value. The lender's mortgage insurance premium is designed to protect the bank's risk and not the borrower. As a doctor in training, you are exempt from this prohibitive cost. Many of you are no doubt prospective first home buyers, so not only can you borrow up to 95% of a property value, you can do so without having to apply for the First Home Loan Deposit Scheme. The First Home Loan Deposit Scheme has limited availability, and most of the lenders that participate in the scheme offer suboptimal lending policies for doctors. Being able to borrow 95% of a property value with no red tape is a huge benefit to you. You are training in the vicinity of Newcastle, Lake Macquarie and the Hunter. In these areas, you can buy a very good house for less than $650,000 and hop on the property ladder very early in your career. So in theory, you have now seen that it takes a relatively low deposit for you to buy a house. But what does this look like in practice? The estimated value of this house in Mayfield, a suburb of Newcastle, is $650,000. If you are a first home buyer, there is no stamp duty payable, saving you around $25,000. Minimum deposit is $32,500 or only 5% of the purchase price. As a doctor in training, you will not pay a lender's mortgage insurance premium, saving you another $25,000. Additionally, we currently have the lowest interest rates in history, meaning your principal and interest repayments could be as little as $586 per week. The future is now for your first property purchase, but what else could the future hold? As you know, a medical practitioner can benefit from high loan-to-value ratios with no lender's mortgage insurance. But this is not just for your first property purchase, it is also available for multiple future property purchases. This fantastic benefit allows you to accumulate a property portfolio faster and more cost effectively than people in any other vocation. If we project 15 years into the future, your circumstances will have changed. For example, you may have a family and you may now own multiple properties. But right now though, you're working extremely hard. So why not take advantage of the finance benefits that are available to you at the earliest possible time? By listening to the right advice on your career journey, you can accumulate significant wealth through the finance benefits available to you as a medical practitioner. I'm Dean Menzies from Cutcher Neale Finance. We're experts at helping doctors in training build their wealth through property accumulation. We look forward to hearing from you.
So there you have some insight into what you can achieve as a medical practitioner. There are some very good advantages in terms of structuring and entering the property market available to you. We'll be taking a closer look at insurance next time, as there's some more changes coming at the end of the year in this area that you need to stay in front of. I hope we've been able to provide you with some useful tips, and if you've got any other topic that you'd like us to cover off on, please either let your HRMOA representative know or get in touch via our WealthStart website.